on the COVID front, the preparation gradually coming back to normal as far as their utilization of the plants is concerned. Now that the government has also relaxed norms as far as opening up partially is concerned across the country, of course, we have a very special guest joining in on the phone line to assess of what's going on globally and here in India, the impact assessment. I'm talking about CEO of Barclays Bank in India, Mr. Ram Gopal, who is joining us on the phone line. Mr. Ram Gopal, thank you very much for your time. Let's start by understanding what's your own assessment, the conversations you've been having with your clients, what's the kind of data your research team has been sharing with you, how badly hit is it, and now that we've gradually opened up, what challenges lie ahead?
Thank you, Ajay. First of all, it's a pleasure to talk to you and to be on your show. This is, an unusual crisis, not in small measure because, it was sudden, it has been severe, and it has been, completely new territory for many of us. Large, periods of uncertainty. We do not know how the, pandemic will evolve, how it will end. We have very less view on how people will respond. And the topic that is currently going on, which is what policy responses are likely to happen in order to reconstruct our lives. To your question about what have we been hearing from clients and customers, I think the impact has been severe, not in small measure because the lockdown in India, has been equally severe to some of the advanced economies. And it is always the case that a crisis exacerbates our known vulnerabilities. I think one of the things that I must, point out is it was even before we entered the pandemic situation, our economy was weakening. The financial system also, was trying to find its feet. Several countries have had their own responses. I think for India, it is made particularly idiosyncratic because the hardships are higher, the health capacity is weaker, our own ability to enforce restrictions, is circumspect. As I hear, customers and clients, this is on top of people's mind, that the fact that the crisis has been weakening their growth profile much more than anticipated.
There's a concern in the last couple of days which have gripped the market, and a bit of it is reflected in today's price action as well. The way Bank Nifty is leading the decline in the market right now, that the NPA cycle, which was just starting to get reversed, will stall, and then fresh NPA creation will start once again, starting with sectors like airlines, entertainments, etc. SME and even retail will not be untouched. What are your thoughts in this direction? Do you think these concerns, if not, are actually materialize? To what extent is anybody's guess, but this cannot be ruled out? And what are your own observations after talking to some of your clients?
First of all, Ajay, I think the impact is multi-sectoral. As you point out, there are some sectors for which it will be a multi-year recovery path, if at all. And for some, hopefully, as we get into Q2 of this year, we could see, them come back to their original growth trajectory. Some of the things that we witness is, if you look at power generation, despite the onset of summer, that has taken a hit. If you look at railway freight, that has come down. If you look at fuel consumption, that's badly hit. if you look at it and you talk about industrial straits, much of the, where the economy is, Maharashtra, Delhi, Tamil Nadu, Punjab, I think they have seen major economic losses. Even if you looked at, states like Kerala, Karnataka, Haryana, where they have seen a faster recovery cycle, my sense is that while there could be, the pace of recovery could be contingent on some pent-up demand, our own sense is that, there will be a precautionary increase in savings, reduction in discretionary consumption, and specifically, I think, on sectors that you mentioned, travel, recreational services, aviation industry. So I think, the viewpoint that this is a difficult road of recovery, I think there are surely signs of that.
Right. Talking of recovery, the economists are engaging in discussions what could be the nature of the recovery going ahead, with policymakers and corporates coming together to put their mind on, to address some of these challenges which you're talking about. The V-shaped recovery is absolutely ruled out. Very few believe there could be a U-shaped recovery, and now people are talking about on the street that it could be a Nike swoosh kind of a recovery, a delayed V. You must be getting a lot of inputs from your colleagues overseas as well on what's happening in their own geographies, and this is a global issue which we are grappling with. India is not isolated. Share with us some of the intelligence or inputs you may be gathering from your colleagues overseas on how corporates are assessing, policymakers are assessing, and how things could be 3 to 4 quarters far out.
So Ajay, I think we should put the response in broad buckets. First and foremost, there is a health and safety response that governments, both public, private sector companies need to engage in. Then there is this response in terms of social insurance. Several markets, have talked about, something in terms of a payout, not necessarily income dependent, and we could talk about few markets where we've seen this happen. And the third bucket is in terms of stimulus. So the health response, the social insurance response, and then the stimulus. So if you look at, Asia Pacific, if I could use that as, context in terms of how the other markets are responding to it, I think, there are both monetary as well as fiscal response. I think none of the central banks in the region have been sitting idle. Like in India, there have been rate cuts across the board. In Australia and New Zealand, I think it is possibly the case that they've reached the lower bound. The rates are already low. They've possibly reached the lower bound. So their response has been largely in terms of fiscal. On the fiscal side, governments have also been scaling up. So if you look at Australia, they've announced something to the tune of 11% of their GDP. New Zealand around 4-5%. Korea similar to us thus far, which is about 1 to 1.5%. I think the key what shall I say learning or observation is that countries which have got a low reliance on foreign inflows, where there is high foreign reserves and low inflation, I think they can think of the template that the advanced economies used for the great financial crisis of 2008 in terms of QEs. But markets like us, where that isn't necessarily established, I think our response will therefore be very calibrated. That's what we've been observing.
Right. All right, Mr. Gopal, we'll let you go on that one. Thanks so much for taking time out for us today, chatting with us on the show.